to DevClub meetup number 20. Today we are gathered to listen for a lecture on topic venture capital for startup founders. First, thanks to Mr. Moshe Sarfati, founder and managing partner at Aristagora Venture Capital Fund from Israel, who will be sharing today his knowledge and experience, and he has a lot from different institutions related to startups and financing. So we will have a lot to learn from him. But before we start, we especially want to say thank you to Embassy of Israel in Belgrade, who is supporting our lecture today through program of Israel in Montenegro, and to give a couple of minutes to Miss Mayam Ventura, who is Deputy Chief of Mission of Embassy of Israel in Belgrade or Serbia, who has now opportunity to thanks to all, to say a couple of welcome words to all the participants.
Thank you. Thank you very much. I'm humbled and honored and very, very happy to say a few words today. I've been in the embassy for the past 2 years, and it's the first webinar that we were able to organize in this topic. And I'm hopeful and assured that it will be a great one and one of more to come. So first and foremost, a big thank you to Daniela and Ksenia, who were really professional and arranged a wonderful meetup. And of course, and forgive me in advance if I mispronounce, to Dragan Shabarkapa.
Yep.
So thank you to you, to Predrag Lesic, and of course to our Israeli guest speaker, Moshe Sarfati, from Aristagora, with full of experience, and I'm sure you'll find it very informative, and we're always happy to share our know-how. So feel free to also let us know any insights, comments, requests for further topics, discussions. We're happy to continue this cooperation. And generally, I'll say whether it's interesting to hear or not, but we're very small, but we have many areas of cooperation with Montenegro, whether it's Spark Me, whether it's cultural events, which by the way, we will have a film week of Israeli films soon. So I invite you all to follow our Facebook page and follow that. Whether it's tourism, that I don't know if you have noticed or not, more and more Israelis are discovering beautiful Montenegro. I myself, unfortunately, have only been to Podgorica, but it's on my list. So a big thank you for being here. I hope it will be insightful, and I leave the floor to Moshe. The floor is yours, and thank you for being with us.
Thanks again, and just to add, we have been, so last 2 years that we exist as DevClub, we have been organizing these kinds of events in a similar way related to topics like startups and IT primarily. But with your support, I strongly believe that we will have much better results. And
Great. You know, startup is Israel's second name, basically. We are. I mean, it's not
our second name, but we hope that one day it will become. We are not torch bearers in region related to the startups. We are far behind, but with support from Embassy of Israel and all other institutions similar to Embassy of Israel, we can be better, and hopefully we can catch up with the region and provide some better companies in the future that could become unicorns. That will be good for Montenegro at least. So let's keep coming with this kind of collaboration in the future.
Great.
Participants, please be active, ask questions, and interrupt Moshe. He said that he wants to be as interactive as possible. So ask questions that you have so that we can catch all his experience as much as possible during this session. Moshe.
First, yes, so thank you. If you can stop sharing your screen, I want to see people's faces and stuff like that. So I encourage you guys, turn on your cameras. Let's try to see you. I can't. Can you do an option, Dragan? Can you do an option that I can see the faces of everyone? Not really. All right. I can't see this option. Can you try to make that I be able to see?
Neither can I.
Yeah, can you make it that I'm yeah, maybe if you'll make me the host or something, maybe I will be able to see everyone's, and I want to make it as entertaining as possible. We're gonna get there. Hey, Boris, Dario, come on, guys. I encourage you guys to, while Dragan is working on making it happen, hey, Ivan, I'll start. Hey, Boris, here we go. The first one. Tanya, here we go. I want to see that you are actually that you're actually alive.
In the office. Can you hear me?
Yes. Now I can hear you. Here we go. Here's Dario. I like the paintings in the back. Somebody was not doing the finishes in the back end.
Yeah, just experimenting for now. So if you want to see everything, so we didn't expect this, but yeah, it's just few of us.
Yeah, that's fine. That's great. So I mean, while he set you up, turn on your. I really encourage you to turn on your cameras, because we can take it both ways. We can take it one way of having a boring presentation of which you're not gonna get a lot, or we can have an entertaining conversation, which I'm gonna try to share some insights that are meaningful for you. But at the end of the day, I'll give you a few more minutes to see faces. End of the day, I'm sure that you are here with me today because you care about what, and I'm sorry, fucking hell investors want, how they think, why they invest in some companies, how they're gonna invest in you, why when you're looking on companies, sometimes they say yes to this one and don't say yes to the other, and maybe many other questions that you might have. So feel free to stop me and to ask questions throughout the session. And I want to see who's the first brave one to say that he's willing, what's on his mind, what he's thinking, what is the reason that he's here on this line. Who's brave enough? Ivan, let's do it. Why you're here? Why are you wasting your time from Montenegro discussing with someone?
Yes, I understand him as my friend, and I like what he's doing here with the DevClub and ICT Cortex and everything. I follow his work. I suggest his to join some new developers with his group and everything.
Okay. Any other reasons? Who wants to say why he's wasting the time with me today?
Yeah, maybe I'm also in IT. I'm also a developer. I'm working on Angular project now currently. So yeah, perhaps maybe some investment, some business. I'm open to any consideration.
So you want me to offer you business?
Yes, of course.
All right. Okay. Anyone else? Any other people here that they have something on their mind that they're interested to know? I see that you are still shy. Jovan, you are shy there. What's going on? Don't be shy. Why you're here? Tell me. Why you're here? Why are you wasting the time with me today?
It just feels like this is a way to, if you want to start something up that you don't want to invest your own money. So learning how to talk, like how to choose people that you want to talk to and how to talk to them is a useful skill. Like you need to be able to support yourself through any sort of an endeavor that you want to go for.
All right. Introduction. Ksenia, why you are here with us?
Hello. I wanted to hear which one the ways are the best for invest money and the smartest way. So
All right.
I hope
The best. Yeah, go ahead.
I hope I will hear about that something.
Okay. So let's start. Let me share my screen and let's start. Here you go. Let me know that you can see my screen. And yes, perfect. All right. So thank God COVID is out and we're back to normal, and we'll try to make the next presentation face to face, visiting you or you visiting Tel Aviv. But you're here today because you want to know why investors and what they're looking for. So we have many topics to discussion, but in reality, I have no real game plan for today's meeting, okay? The more you're gonna stop me, the more you're gonna ask, we can take it to different directions. I'm taking such presentations sometimes in university with professors to very educational way, and with the entrepreneurs and A graders when I teach them on entrepreneurship. So we can take it either way, but it's all dependent on you. But end of the day, I'm here because I want to help you. And this session, despite the fact that it's recorded, it's a private session, which I usually, when I speak in such session, that's not the way that I speak in other session above stages or when I go publicly, is because when we're outside, we need to play a different game. And today I'm playing a different game with you, and I want to share with you and I want to give you more. So just some background about myself. Moshe Sarfati, born and raised in Israel, but I was educated at Yale University in New York. I was investment banker in Bank of America. I had my own startup, which I was an entrepreneur, which I sold to the Belizean government. Then I had my first VC called Krypton Venture Capital, Krypton from Superman, not cryptocurrencies. And this is my second fund called Aristagora, $60 million fund. I'll discuss about it a little bit later and why I do it and how I did it. But Aristagora, you probably wonder what's the name reason and why I choose it. It's combination of Aristos and Agora, which is the best in the market. This is market from Greece. But why I'm showing it to you? I'm showing it to you not because I want you to remember the name, but that's the most classic lesson that I learned at Yale 101. My first lesson in the university is that no matter what you do, sometimes small things that you do an introduction with people, those are the ones who's gonna make people remember you, okay? So I'm sure that in 10 years from now, you're not gonna remember 99% of the things that I'm telling you in this presentation, but you're gonna remember this guy from Israel, which had the fund related to Aristos, Gora, market, best, something like that, okay? So that's the lesson, I think, the most important thing from today's session, and it's related to some of your earlier questions, is remember, it's in your hands to be remembered. It's in your hands for investors to want to invest in you, to do business with you, to invite you for a meeting, or it's everything in your hand, and the way you present yourself can make a huge difference. So I give this lecture a lot all over the world, and I usually love to put people and countries on those two verticals of people that like to confront versus people and countries that don't like to confront, and emotionally expressive versus emotionally unexpressive. So in Japan, every presentation I do, they do yes with their heads, yes, yes, yes. You don't understand 95% of what they think. You think that you know them, you don't know them. In Israel, when you go to the street in Serbia, and I'm sure, and I'm gonna end Montenegro right after this presentation, I'm sure we are all in the same region. We like to argue, we like to say that we think we are right, and we like to express our emotions. So I'm here to say that I love each one of you, and I'm here for anything you need. Feel free to use my email afterwards to ask me questions and to use my experience in order to help you. So what's with the sushi? Right, amazing question. Not all the slides gonna have the sushi sign. The slides with the sushi are the slides that I recommend you to remember, okay? So you're not gonna have many of them, but you're gonna have some. So some are related to the sushi, and Aristagora, which is my fund, it's a semi-Japanese fund, all of my investors from Japan. So I have a big thing with Japan these days. And so those are the ones that I recommend you to remember, okay? So let's start with something interesting. Do you know how I make money? Who wants to know how I make money? Someone can say? Okay.
Exits.
Exits, yeah, can you? Yeah, go ahead.
Successful startup exits, and probably there is like operational fee, management fee for the fund.
Right. Okay, anyone else? How I, Moshe, what's my salary? Do you know? How I go to the shop, buy milk, I don't know. Coffee. Okay. And think about it for a moment, right? You go to the garage, you go to the supermarket, you know how people in front of you make money, and you know how to define the relationship, right? You know what they're looking for. You pretty much can assume how much they earn, and you have a certain, okay, when you go to the bar, right? You know what's going on there. But when you go to a VC or to investor, not many people know that, and don't be shy. Even the most educated and the best entrepreneurs in the world, not all of them know that. And I think in order for you to even understand and start thinking about raising money, you need to understand how the person in front of you is making money, why he's making money that way. Because maybe the things that he's looking for, end of the day, we are all here to make money. Do we have here someone that doesn't want to make money in this process, who's volunteering, right? So end of the day, it's part of our business. We want to have companies, we want to do well in life. When we're all here in order to earn money, and in order for you to know how I make money, you need to understand the business model. So let's start with the business model of a VC, okay? Let's say I'm a VC, I raise money, I go to investors and I convince them that I'm smart, that I'm good, or whatever, and I want them to give me money. So let's say $200 million fund. It's a big fund relatively to Israeli standards. Israeli average is around, depends on what the fund investing in, but it's around 80 to 120. US 200 is about average. And in the Balkans, it's a huge amount, right? Balkans average, let's say between 5 to 15, I would say, with governmental support, and more or less. All right. So I go to investors. Do you know what I promised them, or what I try to explain to promise them? Numbers.
20, 30% profit.
30% profit. Okay. Anyone else?
10%.
All right. All right. So I promised them the average. Okay. Oh yeah, I see there. Sorry, I missed the chat here on the screen. 5-6%. I see here some people that are shy to open their cameras and they bombing the chat. Feel free to join us, guys. So, okay. So I usually promise most VCs promise to investors to do triple their money within 10 years. Okay, that's the market standard. Okay, but let's take it further. So if I take $200 million and I need to pay back about 3 times more, which is 600, I usually take about 15 to 25% in a company. That's the average share size that the VC take. So which means those company needs to get sold in billions, right? In $3 billion of exits. Okay, how many billion-dollar companies do you know? You know, but not many, right?
In your vicinity, in a region, not many.
All right. Also in Israel, relatively to the amount of money invested, it's not many. Okay. So, I mean, everything starts from here. Okay. How many VCs around the world do you think managed to do that within 10 years? Do you have an idea? Write in the chat. 20%, 30%, 50%. What do you think? Any guess?
10%.
10%. All right. Anyone else thinks more? Yeah. All right. So the answer is only 5% of VCs around the world manage actually to triple money to their investors within 10 years. So it's a pretty sad number. It's a crazy number. Think about it for a moment. If you would take your car to the garage and the mechanic guy will tell you that you have 5% to fix your car, what you're gonna do? You're not gonna leave your car there, right? You're gonna go back. But in VCs, that's actually the reality. And the VCs that actually managed to do that, how do you think the portfolio look like? Do you think they had many small success stories? Or they had one big success story and few small? Who think the first one? Raise his hand. Who think the second one? Raise his hand. Right, so you are right. The VCs that actually managed to triple money to their investors within 10 years were VCs that had what we call unicorn. They had what we call, there are a lot of nice words to that. Unicorn, lottery tickets, virality, all the nice words that you hear from many other people. But end of the day, the VCs that managed to do that invested in some big exit. It doesn't have to be $1 billion, but invested in big companies. And everything starts there. Okay? And now I'll explain you how I make money, how I personally make money. So let's take an example. Okay, so let's think about a fund. Okay, what we do, according to the size of the fund, we take what we call management fee. All right, which is a set percentage of the amount of money that's being taken on an annual basis. So which means if it's a $100 million fund, we take $2 million on annual management fee. Okay, which means $2 million in first year, $2 million second year, $2 million in 10 years. So which means about $20 million is taking on what we call management fee throughout the life of the fund. Now, out of that, besides that, we take what we call carry. What is carry? Carry, it's a success fee. We take usually around 20% from the profit we made. So for example, if in this example, there was $400 million profited in profits, right? So the management take about 20% from $400 million, right? This is in a dream company, okay? So why I'm telling you all of that, okay? Because I want to tell you how I make money, right? From the 2% annually, the average, the standard is about 70% go to salaries, okay? And salaries are being divided by the amount of people in the fund. So now you probably ask yourself why I'm telling you all of that and you don't really care about, and because everything starts from this, okay? And I'll give you an example. Let's say now I'm a fund and I raised money. I'm in the first year, right? What I need to do, I need to invest. Usually 50% of the fund is being invested in the first 5 years of the fund. After 5 years, we stop. We don't invest in new companies anymore. And we keep on putting money in the companies, the good companies that we invested in, okay? It's what we call, we don't invest in fresh companies unless we raise the new fund. Okay, so now let's play with it for a moment and think about it. If you come to a VC or an investor or that actually just raised these funds, his chances to put money in you are relatively high. The later you come, the chances for him to put money is going down. And now let's even try to make it more complex. Let's say I'm a VC in the 4th year, and I did not invest in a huge company that is a unicorn or is very famous one. What are my chances? What kind of companies the VC manager is looking for? Do you have an assumption? Obviously, we're gonna look for crazy companies that are gonna be unicorns. But if we invested in big companies already in the 4th year, we're gonna be very conservative, which means we're gonna look for very conservative business model. Okay, so everything when you come to investor comes and starts with this equation. When you meet the investor, what's the size of his investment vehicle? How many people are working there? What's the year of what other investor meant he had in his fund till date? And when you know that, you can know what is the strategy of every one of the investors that you meet. Not every investor wants to hear the same question, the same answer. So you probably ask me, Moshe, what should we say here? What we say there? So the question is always, we're gonna come back to these 4 slides and try to think what kind of investors that we spoke with. Okay, so let's play a game now. Let's try to think, or did you meet, who can tell us about an experience he had with an investor in his past? Do we have someone who actually met an investor in the past? Yeah, go ahead, Ivan.
Balkan investment, it was terrible. I had to pay everything back, and I had to take a lawyer to fight with this guy.
Sorry, Ivan, we don't hear you very well.
We don't hear. Yeah.
Sorry. So it was small investment, 10,000 euro, and it was Balkan investment, and it was bad experience basically. Yeah.
Bad experience.
Yes.
But was it it was a personal, individual, or it was a
individual? He was our guy working in Germany. He made some small money. He invested in our software, but he didn't have understanding. We had some issues, and basically he tricked us.
All right.
And he also put a sign to put contract, and he tricked us. He tricked me personally.
Wow.
And
Sorry to hear.
Yes, and I had to pay back.
So sorry to hear that. Do we have any other people who met with VCs or with institutional investors, spoke with investors in forums, in lectures, that they can share with us?
I can.
Yeah, go ahead. Yeah.
So we had the meeting with South Central Ventures. So that's the VC from Slovenia, Serbia. So they're experienced, and one of the 2 funds that have investments here in Montenegro also, like
Right.
Fil Rouge and South Central Ventures.
And when did you meet them? What did you present to them?
So it was 2 years ago, and there was a small idea. At that time, it was without even like small MVP, but I would say it was early to pitch to them because it didn't have any traction or anything like that. So that's probably why they were like, I would say, interested, but politely no.
All right. So here's another secret. In the VC, we never say no. Okay. We don't have this someone in VC school. If there is one somewhere, I'm sure the #1 lesson is we never say no. We always say, interesting. Send us materials. That's the best no in the world. Well, you don't want people to hate you, so you never say no. You always say, come to me later, send me something. We never say no. But let's play for the 2 examples that you showed, right? And I think those are good examples because we had one investment that you met with what we call, here, let me roll up. Just a second, I'll get to the slides. All right. Okay. Can you see my screen?
Yes.
All right. So basically every investor, you can put him on this line. okay? Friend and family, angels, early stage investors, VCs, and private equity exits oriented VCs, right? So here in the story that that both of you showed, one was pretty much friend and family or a business angel, okay, that invested $10,000, and then you met the Slovenian fund that probably raised about 10-15 million in the second fund that you met them here, right?
Yeah, and it was looking for a seed investment, like it's pre-seed even 50,000.
Right. Now, and when you speak with seed funds, okay, it's very important to understand where they are. If you were speaking with the seed fund in the first year, and he has 5 years to invest, and he loved your team, he has time for you to grow. So he put money in relatively low evaluation, and he has time, right? He doesn't need to sell the company. He has 10 years from now till he needs to sell the company, like I told you before, because every fund is looking for 10 years. But in a business angel situation, you took money, you took pretty much the last money that he has for investment in kind of those such companies, and he has no patience, he has no time for you to grow, he has no time for you to develop the business, right? So you see that every investor that you speak, the pitches or the pitch for each one of them can be completely different according to what they are looking for and to the prototype of the investor, okay? So let's get back to that and say that there is a big problem, and the problem is not only in the Balkans, it's also in Israel. And I know that you all look at Israel as the most perfect place because in high tech that we have everything is booming. It's not true. Also in Israel, there is a major shortage of seed investors. This is a problem that existed everywhere. There are not many investors who sits here. Here, whatever going on here between angels and VCs, we call death valley of startups. Most of the startups in the world, and I'm sorry to say, most of the startup of people here in this group, because this is statistic, gonna die here. They're gonna die after taking a few $1,000s from someone and dying here in this process, because there are not many professional investors that are willing to take the risk and take companies all the way up. All the VCs that you see, and especially, and also in Israel, they are all claim that they are early stage, and you're gonna speak with them, a lot of investors in your life, all of them gonna say that they invest in early, but eventually you will see that they're gonna focus up here, okay? They're not gonna be down here where you need them, they're gonna be here. But why I'm telling it to you, it's not because I want to make you discouraged or not get excited about the process you are going through. I'm telling it to you because there is a zoo, okay? There is a zoo in the tech world, and you are part of this zoo, and I'm also part of the zoo. I'm one of the monkeys in this circus, and you need to know exactly and to do homework before you meet an investor. Besides knowing, obviously, the statistics that I told you before and to do some homework, and in few minutes, we're gonna do this exercise like you meeting me in the first time, okay? Besides that, you need also to look on the fund itself to see what kind of investments they had. If most of the startups, they haven't invested in early stage or young entrepreneurs, there is zero chance that they're gonna invest in late stage, okay? So you can have a lot of meetings, not in the right way, or discussing and going to places where investors are not, the chances for them to invest in you are relatively low because this is not what they do. And if they haven't done it and they're experienced in later stages, they're less likely to invest in early, okay? So are we all good so far? You're with me, you're alive? Yeah, raise your hand if you're alive, thumbs up. If you dying there, just I wanna make sure you are still breathing. All right, okay. Any questions so far?
Can you hear me?
Yeah.
Am I audible here? So yeah, just to show the kind of, hi, Matris here. Hi, everybody that I know. So a short question. You kind of had a graph before with the stages of phases of the startup in the different types of investment. I had to change the computer so I could speak because I was in a room full of kids. So
you can bring kids as well. Maybe they, it's not a bad education.
Maybe you and I would be happy about it, but I doubt about the others. So yeah, I'm at the. It's not even a startup; it's a really early stage idea, and I kind of pitched it to a couple of angels, and I had an offer which is around 100K, which is for Montenegrin circumstances, I guess.
It's a lot. It's a lot of money. You're doing something. Yeah. What's going on there?
But while I was pitching, it was also kind of visible that the person who would invest in the money would take a lot of control at this stage, and obviously that also there will be a lot of responsibility from my side. So I kind of took the other road. I put that on hold for the time being, and I participated in a couple of acceleration programs that are kind of really slow way to getting some chunks of money, but ultimately, I'm about to get like 7,000 here and 20,000 on the other place. So there's also, let's say, an alternative road to getting an quote-unquote free money, like no equity based. So I didn't see any of those in your chart. So why is that? Or do you have any experience in that one? So in this case, I invested a lot of my personal time, but didn't let go of any, let's say, equity in this early stage.
All right, so let's go back to the chart and make sure that I understand what you are talking about. Okay. All right. So basically, you are saying is super. So basically, you are saying you could take $100,000, which pretty much, I mean, Montenegro side, it's pretty much a VC or investment vehicle that sits here, right? This is the one who was willing to put the 100.
If you get to the axis of the graph, I'm at the between concept and a startup at the time being. But
okay, so yeah, you were here.
But I was lucky enough or crazy enough to pitch to a person who was crazy enough, or maybe what not, to offer me 100K for 20% of equity of something that was only idea at the point.
20% to zero?
Yeah, 20% of equity of technically of nothing. Also, wow, I had only a concept, which is not a product. There is no visible friction down the line. There was no any revenue coming.
All right. So let me try to interpret it in the way that I see. So you went to an investor who puts $100,000 in 20%, which is pretty much the average of shares that you will give in the first round that you do. Okay. This is something very not typical to Balkan investors. Most Balkan investors that I've met, they want to take 85% for $100,000, or take 70%, or big numbers, right? And this is a mistake that many angels are doing. They're killing the company in day one. And remember that if in the future someone would like to take 90% of your company, send him to me and I'll explain him why he's destroying the company in the day that he puts this money in. Okay. So basically, an investor came to you and say he wants to take equity in the size that is reasonable. Investment, which is typical for VCs in the Balkans, which are here, which are more, they're not friend and family money later on, for 20%. Let's not get into the reasons why you didn't take it, because this is not something applicable to everyone. But basically, you had an investor, which is relatively in Israeli standard, it sits here around here. Okay, Israeli numbers, so sits here. And you decided, basically, you came and said, okay, I will go to friend and family, more or less, gonna take 7,000 here, 7,000 there, 5 for me, 3 for me, and basically gonna give less shares. How many shares did you give in total?
No, so instead, I didn't go to friends and family. I guess Chabo and the rest of the community knows there is a lot of, let's say, again, quote unquote, free EU money.
I understand. Okay, so you took free EU money from all the horizons for free, 5%. And how many shares did you give in general? EU is granted. So did you give all grant? 0. Okay, so
No,
you basically came in. All right, I get it again.
Instead of investing or giving up equity for money,
I understand. You took program here. I understand. Believe me, that's my work. I understand fast.
Yeah, but my question actually was, in this chart, I couldn't see any of those. So
yeah, because for me, all the grants, they are not actually sitting here. They're sitting here. Okay. And basically, this is part of the circus. This one, whenever you go here, this is the second stage of the circus. The first stage of the circus is actually starts here. Okay. I mean, in Israel, for example, we have 230 something accelerators and incubators. We have tons of events. You can speak on every stage in Rothschild Street in Tel Aviv every day when there's no COVID. You can get almost services from all the EYs in the world for nearly for free because they compete with themselves who has more startups in his charts. You get free co-working spaces and offices somewhere in Tel Aviv in less than actually the cost of per square meter, and you're gonna get a lot of PR. And this is what a lot of people don't understand, and a lot of startups don't understand. There is a huge difference between going to an accelerator or incubator or a certain vehicle and saying, I'm going there for 3 months to learn. I have no experience. I don't know. I want this accelerator to educate me. And then forget about if they give you 5,000 euros or they don't give you 5,000 euros. Okay, let's put it aside for a moment from the equation. The only thing you need to think about, who are the people, were they doing it before, and where will they give you and take you to the next stage, okay? And what's the next stage? It depends when you are. There are a lot of vehicles like that that are not doing it, also in Israel and also in the Balkans, okay? There are a lot of vehicles that they started it because a CEO of a corporate wanted to say that he has an entrepreneurship program in his company, and he financed a certain program, and he brings 2 lectures, a few professors, and they actually waste 3 months to 6 months out of young startup life, and maybe they give 5,000 euros or not.
Perfect explanation.
Huh?
Perfect explanation for most of the programs here.
I don't know, and I don't know Montenegro. It's the same in Israel, right? I'm saying that's the circus. Accelerators and incubators, 80% of them are being institutionalized as an accelerators and incubators not because they want to help you. They want to help you, but they're doing because of their own selfish motivations of the sponsor, of the financiers, of the employees, a lot of things. Not a lot of an accelerators and incubators. And I can tell you, for example, in Serbia, you know STP, for example, okay? The technology park, they have professional people that have been doing it for 10 years from now almost, okay? In the beginning, they were not there, and now they know even better than me in certain things, right? So, I mean, you need to make sure that you're going, and I'm sure there are many more, okay? There are more in Serbia and there are more in the region. But remember, before you jumping into a place, even if they give you 5,000 euros, think if they're gonna waste your next 6 months on things. You can interview them, ask questions, don't be afraid to do that, okay? Because if something goes, you don't understand that this is what's gonna happen, you waste 6 months here in meetings and activities that make you look amazing, but you are not going anywhere, you're not progressing. You're gonna get nice t-shirts. Yeah.
As to a VC, if I have, like, let's say a couple of these behind me, am I more attractive than someone who is like fresh on the market, disregarding the idea and the team?
It's no quantity. I'll tell you, for example, and a lot of startups in Israel don't know that. In Israel, we have some accelerators and incubators that give $50,000 to startups. But if the company has this logo, I will not even invite them for a meeting, okay? The startup don't know that. Okay, I'm not going to say names. The startup don't know that, but it's a fatal. I mean, it's a fatal shot in the day they go in, and they don't know. And why? And it happens also in the Balkans. So I mean, sometimes taking money on investments from people or places that are not professional enough, and how you can it can actually cause damage. So I'm not saying what you did is wrong. Maybe you have amazing investors, but sometimes knowing to say no to money or knowing to say no to certain solution and look for a better one is better than doing something that can cause trouble. But in the same time, to sit in the room and not doing anything and not going to the right direction, okay? I'm not telling you not to go to accelerator, but I'm saying focus, learn. You're gonna have, I'm sure that you're gonna have some discussions with accelerators here in this program as well. And you should bring to accelerators and try to listen to what they say. Try to listen to the lessons. Don't be excited from the title. Don't be excited that you speak with Moshe because I'm an investor. Don't be excited that you speak with someone because he's an accelerator. Ask questions, okay? And then remember where they are in the circus. Either they have a real motives to help and have some results under the belt, and think what kind of investors they are and what they are looking for. Okay? Your time is the most important thing that you're gonna have in the next 2 years. Okay? And you can waste it. You won't gonna believe how fast those 2 years gonna pass. And remember this call. In 2 years, some of you will come back to me and say, Moshe, we should have listened to you. We went to an accelerator, we took some money, and we wasted some time. Okay.
Yeah, I actually, it was a couple of the logos that you put there are, and like Chabo said, perfectly described, because there is like at least a dozen of them that have the same mold. So same names of the classes, same topics that they cover, even same moderators, or let's call them teachers. But also, even though I have a bit of experience in general, but I think that the knowledge there is valuable, as long, like you said, you can ask the right questions and listen to the right people. So really, really valuable advice from you. Thanks.
Sure. So since we don't have a lot of time, right? We have about 10 more minutes.
Yep.
Dragan, more? It's more or less, yeah.
We can speak more if you have time. It's not limit on our side.
Oh, okay. So
I wanted to ask one quick question. Would you invest in any startup that doesn't have team full-time commitments? Like if they are working part-time somewhere else, would you invest in that kind of team?
Okay, so it's a good question. And I'll come back. You know, I think the best way would be to summarize what I told you and to summarize what we are looking for. We use our fund, okay? We use our fund, which is called Aristagora. And just a moment. I'll show you. Okay, so let me know if you can see my screen now.
Not yet.
Not yet.
Yeah, we can now.
All right. So let's now discuss about Aristagora for a second and what we are looking for and why we're looking for and how we do it and what's the process. Okay, and I'm sure that you can learn from us just as an example. Okay, and I want to do a live session with you. Okay, so you can see my screen, right?
Yeah.
Okay, so let's go let's do a live session while we speak. And you speak with me, with Moshe. Nobody told you anything about me, and you know that I'm working in Aristagora. Okay, so the first thing you need to look when you look on investment or investor website, for example, you need to know, I mean, try to see if he has live statistics, if he has some, you know, something live from recent news, things like that. If it's a live, okay, if it's a live website, or if it's a dying place. If it's a dying place, most likely they're not investing anymore. They're in the 5th, 6th, whatever year, right? So let's say you go to our website, you're real quick gonna understand and see, okay, you have it also in English. You saw that we raised $60 million fund, okay? So now you already, let's play for a moment. How much we make money, right? $60 million fund, and you know that we have 4 employees, 2% annual management fee, okay? You can do that, right, relatively quick, very fast. You understand that our budget, annual budget, is 1.2 million. 1.2 million, 70% goes to salaries, the rest is expenses when we have some team under us. But still, you know that we are a fund that has enough money and resources to spend and to invest in the process of filtering, seeing companies, visiting ecosystems. Okay, so you go one. Then you go to a fund, and for example, look on the portfolio. So you already see, you can see on our investment, and you can go real quick and see that all those 3 investments were in the last quarter. So relatively fast, you can see that our fund, for example, you can see here news, we set up the fund in September, we have 3 new investments, and you know that the size of the fund is relatively small Israeli standards. And why is that? Because we invest only in early stage. Okay, so look what happens here, and we can go for 5 other more VCs in Israel and abroad. From a real quick search, you can get the full profile of a VC and what they are looking for. Okay, and now you look on the those one. You can look on each one of those companies. For example, Linkside, Suridata, doesn't really matter. You can just Suridata. You can look for those companies immediately in LinkedIn, and you can see some, you see it's a relatively new startup that was just established not long time ago. So you actually realize and see that the companies, the type of companies we invested in are relatively young. This is a company we invested $250,000 for your interest, okay? For example, and in others we invested more. So here we go, you have a test. In 1 minute, you can understand what a VC is looking for. You understand that actually we are in the first initial stages, and then you can dig more, you know, and see what we are looking for. And let's, for example, what we are looking for is a fund. And this goes back to your question. When we're looking and investing in a company, we look for early stage and we look for strong teams. And now what's the definition of strong teams? There's no clear definition, but if we find out that everyone is not taking skin in the game, that I mean, all the team is working and has 1 hour per night to deal with a venture, it's a no for us as a VC, okay? But it might be relevant for incubators and accelerators, okay? But this is something you need to ask investors because it changes. I'm sure that the business angel that invested in our friend, he didn't care that he has some other things that he was doing, but some VCs care and some not, okay? The earlier you go, here, the more likely they're gonna accept that some of the team members are actually working, okay?
Makes sense.
The more you hear, the more money you want, less likely, okay? Any other questions related to that?
Yes, speaking of which, do investors tend to follow technological trends, you know, the current technological hype, the buzz that's going on right now? Or does it simply come down to the, you know, the idea, the team behind it, something else? How important is a technological trend, current technological trend, when investors are, you know, thinking of investing somewhere? Do
I call it
that drive them?
It's a good question, and it's a very good question, and I call it a swimming pool test. Okay, let's say now you're going to the swimming pool with your kids, if you have kids, or you will go one day with your kids, right? And I mean, if all swimmers running into the swimming pool and there is excitement and everybody's happy, you probably would like also to go in. But if everybody runs away and shouts shark, shark, and running out, you're not going to go closer to the swimming pool, no matter what's going on there, right? So it's exactly like that with trends. Usually, we are not sitting here in the university and do a research what's going to be the next trend in 25 years from now. But we are living the trends, right? I can open you the CRM. I can tell you that, I don't know, 2 years ago, fintech was there, crypto. Before that, you know, every few years, the trends are changing and we are living throughout the trends.
Yeah.
So obviously each one of us wants to be a leader in that, but the VCs, even though we like risk, we're not that riskier, okay? We want to see that actually something is going on. For example, VC is not going to invest in flights or would not invest in flights to the moon, I don't know, 25 years ago, okay? For that, we have crazy people like Elon Musk and Bezos and, you know, all those guys. VCs, we are relatively cautious when it comes to trend. We want to be the leaders. We want to be the first ones, but we don't want to be the first. We want to be the second liners. After we see some crashes, some people that get failed, only then we coming in, okay?
So it's more like a rule of thumb, not like a, you know, firm.
We are stupid. I'm telling you, and I'm also saying it on myself. Okay. I'm stupid. I'm not sitting all day long and learning about what's the best code in the world. Okay, I have no time for that. I'm seeing 1,000 and more startups every month, every year, right? So do the calculation. I really don't have time. I learn most of the technologies from the startups that I see. Mm-hmm. I actually learn. My learning curve is in the meetings with the entrepreneurs. Therefore, the more you educate us, it's better for us, because think about it. Somebody, you know, I don't know. Today I spoke with someone about bees, and I spoke with someone about e-commerce and fintech, and I don't know everything, right? I'm, you know, I was international studies and finance major. I don't know all those things.
Moshe.
So part of the learning is by sitting with entrepreneurs and listening to them, and the smarter they are, I want you to show me that you know better than anyone else. It's your job to know your ecosystem.
All right.
And those are the best meetings for me, when I sit down and I say, sorry, what the fuck? I didn't know that you can make actually so much money in bees, right? For example.
All right, thank you.
So you see, Moshe, you see many startups like on your calendar, booking meetings and everything else. So how do you filter those good ones? Like, you probably don't spend too much time on each of them. You probably have some kind of filters that you rule out most of them quickly. What are those filters for you?
I'll tell you a secret. If you'll sit with me, you will be able to do this. You will be able to filter here. I'll show you. I'll show you the process.
I'm ready. I'm ready. I want to see the process from the other side.
You know what? Okay, let's do the process from two sides. Don't tell anyone that I show it to you.
Okay.
I promise your dignity. Okay, so let's do two things. One is for process in general for the process itself. Okay, you can see my screen, right?
Yes.
Yeah. Actually, it's about 10-ish to 11 steps of the meetings that usually the first stage, okay, is company application initial. By the way, you can download this booklet in our website, you can read it afterwards, use it for your own benefits. It's pretty similar for most VCs. Company application and introduction. This is where we go over your materials and what you send us. Then we have partners meetings when we have two different people that actually meet the startup. Then we learn. You taught us here. Now we are learning in our side. We try to challenge what you said with experts that we bring to the table. Then we have some technical and legal DD. We're making sure that what you show us is actually yours and there's no things that are illegal. And then we negotiate, okay? And then the Aristagora VC step, where we drink a lot of sake with the startups, and that's how we celebrate, right? Okay, so let me show you now how it looks in the other side, in our end, okay? In my side.
Can you tell me like what percentage of applications get to the step 6 or
yeah, I'll show you exactly. I'll open my CRM. Initial step is applying in the website. Our is automated, some are not. Then
I cannot publish this meetup on YouTube, right?
You can. I'm not sure.
Just
here. Sure. All right. Here you go. So now you have the CRM from September, from the new fund. Okay, when we launch in September, we have 740 right applications, and each one of those steps, right? Now, and here are the 3 companies we invested. 4 are in term sheets, and you can actually see that this is live. Okay. And basically, you can see that most of the startups are being stuck here in those few steps. Okay, hundreds of startups are going here, and then you go down. So now if you have about 8, 12, 13, you have about 1 to 2%, are being in those stages, and all the ones are getting stuck or not in each one of them, and some of them are still in process. But let's see, for example, a company that invested in our site. Okay, here you go. This is how it looks in our site. We got an investment. Everything is automated. I'll show you what I do, and I do it in the same pace that I do it with the company, okay? Here we go, we have an application. I read real quick. I see it's a company in Israel. How much I see that they didn't fill all the requirements. Minus, I ask how much money you're looking for. They didn't put it in. Okay, let's take, for example, another company. For me, it's a minus. Let's take this one. Another example. Same. Okay, yeah. They are looking for $4.5 million, and those are from the US. Okay, fine. Another one. Now, after seeing the initial that data, I open the materials that sent and attached. Okay, and this is the company. They send me a 1-pager, and I don't see a lot. Okay, 1-pager. Try to understand what he's doing. Okay, let's try to understand what this company is doing. Pioneer industrial IoT that can save any industries billions of losses. Local smart wireless sensors spread across the plant floor, offering quick ROI. It's not a lot. It's not super friendly. Okay, here in a minute. Okay, that's what I spend. I spend about 2 minutes. I'm not reading each one of the lines here and trying to understand. I'm just trying to see. I see that they did not fill everything. They were very short. They didn't expose enough information. They didn't send a presentation. And it's another IoT company that in a market that I know. But in the other end, I look on the entrepreneurs and I see, okay, those are interesting entrepreneurs. Let's say, is it worth some to meet them or not? What do you think? Yes or no?
Are you gonna base that on our answer?
Here.
Is their destiny in our hands?
Yeah, it's your destiny in your hands, right?
They look serious enough. So
okay.
yeah,
So here we go. No,
like
I'm showing it to you how it's done. I'm showing you how it's done. That's exactly how it's being done in any other VCs. Okay. I looked at them. The materials are not amazing, but they are professional enough. It's an IoT 4.0, which is a good trend. The entrepreneurs look smart. I read their bios are in the right way. And here you go. That's what I do. I'm here. Here. I'm showing it. I'm doing it with you.
This is live.
This is live. You see, I introduce, boom. Basically, I'm offering to come for 30 minutes, and now I'm changing them. I'm taking responsibility on this company. Here we go. You see, that's how it's being done. Okay, here we go. That you have a company that got from an application to a real meeting. Okay, that's it. I don't have more than that. I go about hundreds of companies. If I would see complete failure, let me show you one that was said that I denied, and we'll conclude with that, okay, that you'll be able to see something that was denied. Let's take note, not active. Here. Here, not active. Okay, not active in the lead stage. Okay, which means they sent something in the very early, in the qualified lead stage. Let's take something here. This company. Okay, I said no to them. Okay.
No.
Look out there.
Politely no.
Okay, this is a company. Okay, look what they feel. Okay, about their entrepreneurs, they feel nothing. I said they did not respect me. Okay, they did not waste the time sending a lot of information. Who are the entrepreneurs? What they are doing? Why they are doing? There's nothing there. The presentation is bad. The presentation is bad from what I've seen. That's it. And so I said at the same time, I said no. Okay, but I know that you're all looking at it and say, oh, it's not serious, okay? But we are all human, okay? That's how it works. It's not, that's why I'm saying, and that's why I told you in the beginning, the small things that you do, and let's go back to the slide, the initial slide that I done in the beginning, the small things that you do can differentiate your work from others, okay? And this is, I'm not just putting it here just to say, this, you saw it as a live situation, right? Small things that you put in a presentation, small things that you do in the application process differentiate you between getting a yes or no. So everything I'm saying it very sincere and very honest. And that's how you saw it saw it in live. Your presentation, your slides, your writings in the first initial meeting and the first few moments, those are the ones who are going to differentiate sorry, between you and others. So before I summarize here, I want to tell you something. So remember, okay, that there are some icebreakers, the Aristos and Agora example that's going to differentiate you from others. Know your ecosystem, know the investors that you speak with, know if they are relevant and in what stage they are, okay? Because your pitch can be different, okay? Eliminate mistakes, don't do stupid mistakes when you don't need, especially in the first few times. Remember that you are a startup and not McDonald's, and some investors don't look for McDonald's, they look for startups. Look for a certain magic and don't waste time. The future is in your hands. A lot of people in your ecosystem willing to help and assist. Just try to use those resources. And I'm here to help you in any way I can. And I wish you a lot of success. And And I have 5 more minutes for Q&A if you want.
Nice. Guys, do you have questions?
I have few.
Be quick.
Yes, I will be quick. Can you show us a list of your investments in past 6 months? If I understood you correctly, there were just 3 investments from the last September 2020. And I would like to see what are your investments in the Israel and what is out of the Israel.
All of our companies are approaching international markets. We don't look for companies that focus on the Israeli market.
Yeah, amounts and phases and everything. Do you have just a list with some details? And
I can't hear you. Say again.
Maybe it is better now. I got some headset here.
Let me answer if what I understand. If I understood right. Out of the 700 companies from September, about 15% it's international companies. Okay. International companies, which means don't sit here in Israel, found all over the world.
So in the past 1 year, almost 1 year, from September 2020, you have invested in the 15, did you say, companies, and 85% of these are from Israel, actually.
No, there are 2. We invested. Can you hear me? Just a second.
Yep.
My headphones are about to die.
Moshe, how many companies you invest usually per year based on this fund?
We invest usually about 10 companies per year. We invested in 3 so far. If you saw in your room, we are in term sheet with 4 more. So I believe by the end of next month we invest in 4 more companies.
Nice.
And we pretty much going to invest in about 2 to 3 by the end of the year.
So in the lifetime of the fund, so next 4 or 5 years that you said that fund is investing, you will invest in 50 companies or less?
More or less about 40 to 50 companies.
Okay, got it.
Yeah.
So 10 companies per year, and
yes. Some years it's going to be more, some companies it's going to be less, but that's pretty much the average in early stage.
And what about amounts and the phases of investments? How much money did you invest in these companies?
We invest usually between $500,000 to $1.5 million as a first check.
Nice. And how many equity usually it goes, like 20-25% or something like that?
Between 15 to 25. Okay, depends on the evaluation of the company. I mean, the more mature it is, and the more earlier rounds it had, so more likely we're going to invest less, right?
So usually
in less equity, we're going to get less equity because the evaluation is higher.
Do those companies usually have already some investors at that stage?
I mean, out of the 7 now that we are the 3 and the 4, 2 of them had previous investors, the rest not.
Okay, so that's like first round for them. Nice.
First rounds, I mean, previous investors, friend and family, I don't count as a first, as a first investor.
Okay.
But I mean,
so
I look strategic investor or institutional.
Do they already have like traction, product proved, or something like that?
Again, it changes. Some is more. I mean, it's a triangle, right? I mean, nothing can be perfect. I mean, but for your question, let's say, for example, there is not full team, but with good traction and good market, we can continue. But if there is no team, no traction, and horrible market, the decision is easy. Yes. Always, it's a mix that we never get a full answer or a full house.
Got it.
Yeah.
I'm not sure did I get an answer regarding how important is actually origin of the startup. From where are we coming?
I said 15%. Between 1 to 2 companies a year, we're going to invest in pure international companies.
So there will be outside of Israel, right?
All the companies we invest in are facing outside Israel anywhere. 2 are going to be annually going to be non-Israelis whatsoever. Can be
And
from
usually-
Japan, can be from Israel.
Yeah, usually those are from these countries that we will expect, like USA, UK, or something like that.
All over the world.
Yeah, okay.
In your portfolio, you have this Nimble product. Are they already selling, or are they in the concept phase still?
No, they sold $2 million in Kickstarter. That we use Kickstarter as a proof of traction. We do the first batch on November, sending out, and go out to the market early next year.
And in what stage did you invested after the Kickstarter success or before?
No, before. We use Kickstarter as a nice place to have, delicate lending and proof of concept. Less judging ecosystem.
Moshe, can you tell what kind of support you provide to startups that you invest in addition to the money that you provide? Like, do you?
It changes. It changes. The earlier the company, it changes. And according to that, we also choose some of the startups because we don't have capacity to support. As you saw, we have 4 partners. We don't have capacity to support 10 new startups. In the 4th year, it's 40 startups, and to help all of them all day long. We have some that we are, let's say, they are earlier, that they need some more, motivation and help and assist, and some that are less. Depends. It changes.
Actually, Dragan's comment was interesting. So you are not bringing contacts and accept the money. Are you bringing something else to the startup? And the additional question would be how long does it take investment process from initial application to getting the money? What is the version? What are the
2 good questions. First, contacts, of course we do and give contacts. That's part of our work, right? When I said to Dragan about help is, working with them on a weekly basis and weekly meetings. We don't have capacity to do it with all. Contacts and things like that, we give to all companies. And for, what was the second one?
How much it takes from initial application process to finish?
It changes. If we feel comfortable, it's about a month. If we feel less comfortable, it can be 3 to 4 months.
You have probably like standard term sheet, right? For each company.
We have a standard term sheet, and it's a standard investment process. Yeah, of course.
Okay, good. Do you have like a pipeline, or do you have like partners, investment funds, which are like even higher, so bigger?
Yeah, most of our pipelines comes from 2 places, either from the circus, accelerators, incubators, lawyers, or from later on stage funds who basically say that this company is early stage for us. Come invest in them now and be with us in the future. So it's we have pipeline from both places.
Okay, so there are like referrals from top. Okay.
Correct.
Okay.
Oh, sorry, I just realized that I was without camera. Sorry.
Sorry, my friend. I just want to congrats on seminar and everything. You did it really interesting. Yeah.
Sure.
Anyone else? Anyone else with additional questions?
Yes. Who are your main competitors in Israel regarding the?
We don't look at it as competition. Every fund. There's no competition. I think the way I look at it between investors in early stage, because we're more supplement each other. We are focusing mostly on early, and we have our own game, which type of companies we are looking for. And we work in collaboration with most VCs. We have a very friendly approach in general in life. That's what I feel. That's the best successful way. Not compete. And in case there is a good company, we sometimes invest and look at the opportunity together with some other funds.
Yes. So usually the company that you invest, you're looking for that company to exit as high as possible, but what's the goal? So if you invest like 1 million in a company, what do you expect as a return?
There's no right or wrong here. Again, if it's in the 9th year, and I invested 1, I'm gonna be happy to go. And now there are 10, I will take the 10. But if it's in the 5th year, it's the 1st year, and the 2nd year now it's worth 10, I'm not gonna sell for 10. Maybe I'm gonna take out from the table $1 million just to cover the initial investment and to have an upside. I mean, and take some money throughout the process of the growth of the company.
And what you said, it's important to emphasize that if you're like later in the stage when you invest, so there'll be probably more pressure from VC to go exit, right? In order to get return.
I mean, when we go in, part of our exit strategy is that we are selling to follow-on funds. Sometimes a good exit for us can be a good entry point for a later stage VC. So that's why I'm saying that when you speak with an investor, you need to know what he's looking for. I mean, business angel who put 500, I don't know, $10,000 would be happy to get out with $200 or $300,000. But the VC that put 200, not gonna be happy with 400 because this is not the risk that they were aiming for example.
So they're going for like 100x, right?
They want 100x. I mean, and then they see where's the reality.
I have a question. Do you invest besides IT?
I can't hear you.
Sorry.
We cannot hear you, Ivan.
Sorry. Do you invest besides IT? For example, real estate or something like that?
I'm sorry, I can't.
The question was like, do you invest in some other domains other than technology?
No, that's our investor invested in us because they want technological companies. So we need to have technological aspect in the company.
Okay.
Yeah. Okay. I guess that will be all for today. Let me see if Daniela is maybe here. Okay.
Daniela knows my lectures by heart. She can work in a VC already.
Also, when you come to Montenegro, let us know so we can be your host. And
I would love to visit you in Montenegro and to meet you soon.
To organize like physical meeting where we can ask all these questions in a nice environment, some nice restaurants or something like that.
Done.
Yeah, I'm here. I would like to thank Moshe once again for being always so accessible to any embassy's proposal, request, etc. And I would like to thank Dragan and all of the participants. This is just a first webinar that we did on this topic, like entrepreneurship startup ecosystem in Montenegro. So in the future, we would like really to enforce our activities. We are hoping to organize another seminar on smart tourism with the Chamber of Commerce of Montenegro sometime in autumn. So definitely we will try to strengthen our position within the ecosystem in Montenegro that is, yes, maybe 5 to 6 years lagging behind Serbia, but since Moshe knows Serbian ecosystem very well, I'm sure that
time flies. I'm telling you, very fast you're gonna look back and say, "What happened there? Look on this ecosystem. Who are those people around me?" Yeah.
So I'm sure that Montenegro within 5 years the ecosystem will look much different.
We hope so.
Yeah.
Thank you, Daniel. Thank you, Moshe. Thank you to all you guys that you participated and asked questions, especially those who were active ones. Until the next time, see you all and goodbye.
Bye, guys. Thank you.
Bye.
Bye-bye.
Bye.